I try.
You do.
The Dow and S&P 500 are on pace to log their worst trading week since June. Let's talk markets now with Linda Dissel, Senior Equity Strategist at Federated Hermes, and Kevin Simpson, Portfolio Manager of Capital Wealth Planning. Good to see you both. Kevin, I'll start off with you. You were just on this program about a week and a half ago, and it sounds like a lot has changed in your mind when it comes to your market outlook. Why?
Yeah, Melissa, you guys did a great job covering it last night on Fast. I mean, so much has changed. This week, we're worried about inflation, the Delta variant, tapering, geopolitical risks. It's a pullback on the consumer. And in just that short a period of time, we've seen that change. Now, it started last week with consumer sentiment. It came in with the worst read that we've seen since 2011. Then we saw retail sales down this week. It's not just the consumer sentiment, it's also business sentiment. Look at yesterday's Philly Fed survey. It came in lower than expected, and a lot of economists actually were thinking that it was going to be a little bit higher. So we've got the consumer pulling back, we've got the businesses pulling back, and I think that things have changed. Now, are we in a bubble? No, I agree with Kathy Woods. We're not in a bubble. But can we see a pullback? We can see a pullback, and we will see a pullback. Linda, I read your piece last week. You wrote a great piece, and you said that economists have been talking about a 5% pullback, and they've been continually disappointed. I thought that was such an awesome line. And last week, I totally agreed with you. But two things have changed, I think, since you wrote that piece that have tilted my way of thinking a little bit. One is China. You know, surprise, China is a communist country. Free enterprise, capitalism, personal wealth, these things are frowned upon in that establishment.
Right.
And two, the Delta variant, I mean, I think it really is a third wave. Businesses are changing the way they're reopening. We just heard about a lot of companies that are pushing back the reopening until January. Personally, I was scheduled to speak at a lot of conferences between now and the end of the year.
Right.
And across the board, all of them, they've been canceled, pushed back, gone virtual. Sure. I don't know, maybe they found a better keynote speaker, but I'm not going out. I'm not traveling. We're seeing things change, and volatility is entering the market. We're seeing it. And a pullback's going to happen. So it's going to be 5 to 7%, and I think it's already started, Melissa.
So, Linda, what's your outlook? It sounds like you think that there's so much cash around, so much liquidity, that you sort of can't fight this at this point.
Well, yes, I do feel strongly that way, and I have to thank Kevin very much for reading my weekly piece. Yes, we're bullish at Federated Hermes for sure, and I know we all talk about we need a 5% correction. We shouldn't play for a 5% correction. You're not going to catch the top, and you're not going to get back in at the bottom. And we're talking 5%. Here's where I would agree with Kathy Woods insofar as, you know, these are exciting times. Actually, this is a time that I think we're going to look back on someday and say, gosh, we had a moment where we could have really invested. The consumer, yes, there was a bad number, which was really outsized in a bad way versus other consumer sentiment numbers. This week, again, the Bloomberg consumer sentiment number was good. The Target CEO said his back-to-school sales are strong and broad. So I'm rooting for the consumer. And I realize I don't think it's you, Kevin. I think we're going to start to see some of my speaking engagements get canceled, too. And that's just fine with me. I love the slippers that I'm wearing right now with my nice top here. But I think it's bullish. I think it's good. And if I may say, September is coming up. August, September, typically tough months for the market. But we may have peak variant numbers right now in those states with the lowest vaccination rates, just as we get the booster to come in, just as the bonus runs out for the extra bonus for the workers, and they get back to work. And I think you could see things really picking up here as we work our way into the last months of the year.
So, Linda, it sounds like basically we might see some sort of a pullback, but you can't play for that. It's too hard to sort of, get in, get out, et cetera. So how do you keep your portfolio positioned to weather through what could be a choppy period?
Yes, it could be a choppy period. I think we have to stand back and say, where are we in the cycle? Very difficult with this particular one. But certainly we're not early cycle, so you can't say I want to buy all value stocks. You want quality. We want quality growth and quality value. And if some of our favorite stocks on either side get a pullback, which is what we've seen, rotations back and forth, guess what? I still have trillions of dry powder waiting to be invested. I don't have to sell what I've got already. I can use some of that dry powder to buy what's being pulled back right now. We're fans of the epicenter stocks. I mean, energy is just the poster child for that type of group. it's pulled back fairly dramatically. It's the sector for the broad growth of the global economy, which, yes, we're slowing down with the variant, but the people who have had their vaccination and they're not going to the hospital, they've got a flu, they lay around the house for a while and they get back to work. So, I think it's all good for just continuing to invest. Don't be too cute about it.
All right. Linda and Kevin, thank you.